Hello Dairy Today viewers, from your advisory team at Stewart Peterson, here's your dairy market week in review. Let's start by taking a look at some of our dairy products this week and how they finished relative to a week ago. Our cheese market had a breakout type of week with blocks and barrels up 10 to 15 cents. We'll show you that development in just a minute. Butter prices did slip just a bit this week, down to 183 1/4. Powder prices slightly higher this week and relatively quiet trade there. Class 3 prices were sharply higher with our developments in the cheese market, led by December and January with sizable gains in those 2 months. Gains were rather small beyond that in 2012, and I will share that chart with you in just a minute. Class 4 futures this week did close lower, seeing some of that pressure spill over from both our spot butter market as well as our latest global trading event that took place on Tuesday. In that auction, we did see most powder products lower and the overall index down 1.2%. Here is on Friday this morning, we did have our October announced prices from the USDA. Our Class 2 price went out at $19.41, Class 3 at $18.03, and Class 4 at $18.41. Getting back to some of the price action this week, I mentioned it was a breakout week for our cheese prices after 10 weeks in this 10-cent window that we had been in between about 167 and 177.5. Bidders this week showing incredible aggression and bidding the prices up in both our block and barrel markets to break out higher. Challenge here will be to see if we can just extend this run straight higher, or if we do show some consolidation after 2 big weeks to start us here in November. Those gains in our cheese market did correspond to sizable gains in our Class 3 futures, specifically our nearby months. As we look at our weekly December chart, where each bar on the chart behind me represents 1 week's worth of trade, we've now seen an incredible 4 weeks for this prices, where we went from the lows here in early October back towards our contract highs here at $18.25. Here again, the challenge will be if we see some consolidation around these contract highs at 18 1/4, or with the gains in cheese, are we able to press through those highs, which is a very positive technical development. Looking farther out into 2012, we did see very limited gains beyond January as we look at our deferred milk prices. As we look at our 2012 average price, we continue to maintain this overall uptrend of prices, and next week's grain reports and outside market influence may have some more news and some more influence on where our 2012 prices are headed. One of those key outside market indicators will continue to be the US dollar. Here we look at the weekly US dollar index, and several weeks ago we broke out over key resistance at 76.5. However, with all the, at the time, positive news out of Europe with the Greek bailout situation, we saw the dollar weaken and come back below this key level of support. This week, however, that all did a 180 once again, and we're pushed back over this key level of 76.5. Overall, this continues to be an incredibly volatile market. Milk has done a very good job of hanging tough despite all the swings, and the US dollar and our grain prices will continue to be key indicators to some of those back months of our milk futures. So as we look ahead to next week, there are several developments we'll be keeping an eye on. As mentioned, first will be our cheese prices, and if we continue to run straight higher or do see some consolidation back down. Secondly, we'll be watching our grain reports next Wednesday to see how those markets react and what type of influence that can have on our 2012 milk prices. Lastly, we'll continue to watch developments in some of our outside markets, such as the US dollar, and how that relates to not only our milk prices, but also our commodity complex as a whole. From your advisory team at Stewart Peterson, I'm Stephen Shalla for Dairy Today and AgWeb.com.